Hey Elliot, how's it going?
Pretty good, Josh. How about you?
I'm doing pretty well. So I thought that this episode topic that I had thrown your way is that we could talk about Phi 201. And the reason why I bring that up is because I know that you have the pleasure,
I was gonna say the distinct honor, pleasure.
honor.
Yeah.
Yeah, you have the honor of presenting to our local Phi group this week on Phi 201. And I was just curious what kind of topics you were going to cover, and just maybe we can talk a little bit about our experience with Phi 101 that we had earlier this year. And I think that was pretty well received. And overall, I was just kind of curious, what do you got on the agenda? And is there anything that we want to maybe dive into a little bit more here and talk through and see where things are going?
I do. This is what I'm doing on Thursday.
I think so.
Yes, you are correct. Me and local celeb. Now, I shouldn't even say local. Our national celeb or worldwide celeb, Alan Hansen, is presenting alongside me. And I should say that he is the main content producer of what we are doing. So I'm going to try and ride his coattails as best I can, but I know you just want a sneak peek of the all the nitty gritty before we present on Thursday.
Yeah, this will be
Yeah.
definitely coming out after you have presented, but it was an opportunity for you to maybe just dust off any of the jitters that you might have presenting in front of such a large crowd because I haven't looked at the numbers to see what we're expecting, but I know that for the Phi 101, we were one of the, if not the first, I guess we were the first local groups to present that. In fact, it was so well received that we had, I think, approximately 75 people in attendance for that. And we actually had to postpone the meeting from January to February so that we could find a larger event space to be able to host that many people. And since then, it has been pretty cool to hear Alan get the recognition on the ChooseFI podcast from Brad and Jonathan. And I think that document has been tweaked a little bit and has made the rounds and is now being shared in the ChooseFI community for the local groups to then take that and use it in their own Phi 101 conversations. But for us, I think you and I even learned a couple things in the Phi 101 class that Alan presented, and it was very well done. And but it was a lot of the things that we're probably a little bit more familiar with the concepts. So Phi 201, I think some of the things that I know you guys were going to get into was regarding taxes and other things that are just a slightly higher level.
So I will say that taxes has kind of been moved off to its own presentation even outside of this. So obviously, with our buddy Alan's background as in accounting and just being a former CFO, he is very dialed into taxes. So I will by no means claim that accreditation by any means. But in this one, we're going to talk about a bunch of different topics. So I would say, it's a 201 class. It's not a 301 class. So some of the things that we're talking about still may, I would say none of this is like earth shattering, things I would think to you or I. So topics like investing versus saving, what's the difference between that, the concept of speculating and how that plays into everything that we do. We are going to bring back, I know one of the fun pieces of the 101 session was where Alan threw up some graphs and we were trying to identify what was the time period in history based off of the market returns. And so we're bringing that one back. So should we panic when the market does the things that it does, and talk about, isn't investing risky? And so we're going to talk more about, I would say, investment risk, kind of doing a lot of definitions of terms around just generally investing, risk management, all the different things about what's your risk tolerance, what's your capacity for risk. Then maybe I would still say this is pretty low level, maybe not even low level 201, but where do we invest? And so not saying like what funds do we necessarily invest in, although I think that's certainly talked about a lot within this space, but the different types of accounts. And so we have tax deferred accounts, we have tax free accounts, and I say tax free, that is ironically enough how they are seem to be stated online. It seems to, it's like nails on a chalkboard to me, is that it's not tax free per se, but just that you've already paid your taxes up front. Things like HSA, and then we're moving more into the different types of asset types, asset allocation. We have all kinds of fun things in store for Thursday. So Alan he was the first person, him and Sarah were the first couple in our St. Louis group to do their presentation. So they'll show up, put their allocation up on the board as far as where their assets are really distributed. I'm going to do the same for Don and myself, just to say, yeah, hey, what percentage of your assets are in a taxable account or a tax deferred account? How much is in cash? How much in equities? How much is in 529s? So on and so forth. And then, the big things like what are the mistakes we've made, resources, all the good things.
I'm looking forward to it. I remember in sound like what you were referring to there is asset allocation and asset location. And I saw that on the agenda, and I've heard a little bit more about that somewhere else. I was another podcast that I was listening to, and I think as I heard the terminology, I didn't really understand what it was referring to, and you call that maybe it's a 201, but I don't know, from my own standpoint and my own experience, I feel like that's a bit higher than that. Maybe it's a high 201 or it's a 301. I'm not sure. That's just for me because as we talked about in our previous conversation and how a lot of my assets are in our tax deferred accounts. In hindsight, I might have done things a little bit differently if I just understood a little bit better about the future potential of flexibility and things like that. And I may have made different decisions knowing what I know now versus what I knew then. So I think that is a really good topic to continue to introduce to people because I feel like there is a lot of people that are similar to me where it's like, I'm going to put all my money in my 401k. I'm going to invest in the tax deferred accounts and maybe don't even have the understanding of the other opportunities that they have.
Absolutely. I mean, I think that's what, as much as how popular our local chapter really has been, we've done a lot of these case studies, and I think a muscle that we really want to continue to build up is more the education and how are we really making making people's lives better in any way that we can, right? Yeah, like you were absolutely correct that I know I had a takeaway from 101 that caused me to actually make a different investment decision based off of something that Alan said. So like that's super cool that even a 101 level class, caused me to make a change. And I know Brad and Jonathan hammer on this more than anything else, but taking action is what's important, and hopefully us trying to approach these topics in a manner that is as approachable as it can be is, I mean, that's what's important, that people don't feel scared to ask questions and get the answers that they really need so that they can take the action that makes a difference.
So you mentioned that taxes is being pushed to its own separate class in the future. Is there a thought? Are you aware? Is there other classes that we're looking at potentially? Is there a 301, a 401 in store? Like, how much further along do we take this quote unquote class?
Yeah, that's a good question. I'll defer to our admins, but I do get to. I know that when Alan and I got together again yesterday to kind of talk through the presentation and who's gonna look to speak to what and whatever else, this was that was one of the topics that had come up, is that I knew that taxes was kind of being pushed off to its own home. So I know, I mean, it's a hard subject just for everybody. Like, I mean, we've definitely talked about John Mulaney and Cody Garrett's new book, Tax Planning to and Through Early Retirement. I still haven't finished it in its entirety, but it's very, very good from the parts that I've read so far. And it's a topic that I am almost certain that anybody can gain something by having additional knowledge in the tax world, whether you're doing your taxes yourself or not. Just being more knowledgeable about the subject makes a huge difference.
Yeah, and it's even one of those topics that I would say that even if you think you know what you may not know what you think you know. If that makes any sense.
Yeah, I guarantee that you don't know everything that you know.
Yeah.
How many times are we going to say no here in 30 seconds?
Right.
But it is, yeah, certainly a topic that you can go very, very deep in. And I would say, to your point earlier about asset location and asset allocation, yeah, I did not mean to say that that's like a basic 201 topic necessarily, as much as I was trying to say, like, oh, a 401k is a tax deferred account. Like, we do have that level of material to just kind of, make sure that we're all talking the same nomenclature. We all have the same level of understanding. I would rather let's say something and remove any doubt from somebody's mind than somebody have a question and maybe be too scared to ask the question.
I think about my own journey and still even I still get tripped up on some of the terminology because you'll hear, like you just mentioned, tax-free account. Like, honestly, I'm not even sure what you're referring to there. Are you referring to a Roth account as a tax-free account?
Yep.
Okay. And like you said, it's actually funded with after-tax money, so you've paid the
Right.
tax on that. And yeah, and then I was in our last conversation, I was using the term brokerage account because that's just what makes sense
Mm-hmm.
in my mind. And
Right.
you were saying your taxable account, and I've heard that it referred to as taxed along the way, and there's just so much variety, jargon, and variety that I really hope that people can just hearing these conversations more and more, people get more and more familiar with them. I know it's helpful for me to talk to you about these things because I still get them twisted in my mind as I'm thinking through them, and in turn trying to explain this type of thing to Lori, who's less interested in all the details and how they all work. But yeah, I think that is just the nomenclature and the descriptions of those is definitely 201 material.
Right. Yeah. No, I think you're right, and that's exactly what, yeah, the session really hopes to be. And I would imagine, I mean, based off of the templating that we're using, it's got ChooseFI all over it, so it's gonna definitely go back towards Brad and Jonathan,
Huh.
and I would imagine get distributed out to other chapters as well.
So we may hear your name getting a shout out on a
I,
future episode.
this is possible. I know that Jonathan did tag Alan and I think like 2 weeks ago. Jonathan may have been, he was a little trigger happy because I think he was saying, oh, Alan and Elliot from the St. Louis chapter, held a session for 40 plus people at St. Louis. I was like, yeah, hasn't happened yet.
Yeah,
But he is very excited about the numbers and everything else that we've been pulling down. So,
very cool.
as are we.
Was there any other topics that didn't make the cut?
Well, no. I think in short is it's a long presentation, but I think that Alan and I both definitely presented enough over probably our careers to know that, yeah, move it along. And even though we have a large number of slides that hopefully we'll be able to progress at a pretty good clip, I know that I think I told you this. I toyed around with the idea of I had heard that Frank Vasquez had used the aid of AI for some of his presentation at Economy this year. And so I attempted to basically throw our presentation into AI and see what came out the other side, just in the interest of science. And I will say that our current presentation, now this is before I do some additional edits and work tonight because Alan has very much done his homework and I certainly have not. I'm a very typical procrastinator over here. Um, I still have my edits to make, and some things haven't quite occurred. But the the number of slides is 52 at the moment. So
Woo.
when we came out the other side with, I had two AI examples. And one, I will say, yeah, it looked very, very evident that AI was involved. But the other one was much more, had a much lighter AI touch, so to speak. It had taken those 52 slides down to about 15. And so, many more graphics that were telling the story as opposed to, we have more, text. That's not to say it's all only text, but there were some better visuals if I'm being honest on my feelings of the matter in the AI versions. But
Huh. That's interesting. So you don't know exactly how it's all going to come together yet as far as what AI will contribute to the end result?
oh, I think we have decided that we're keeping it all human powered content in our presentation for this one.
Human intelligence, huh? No
Yeah,
artificial,
human intelligence. Yeah.
quote unquote intelligence.
Yeah, I was gonna say the jury's still out if we'll be better or worse on my behalf. I know Alan certainly doing his piece.
You mentioned one topic earlier. You said speculation versus investing, something along that line. And it reminded me, I don't know if you've seen this making the rounds here lately, but there is a documentary that came out recently, and it's the actor Ben McKenzie. Are you familiar with him? He
Not
was he was Ryan on the OC. He was
okay. Then yes, I am.
okay, Gotham. He was the
Yeah.
Gordon.
Mhm.
He apparently 5 or 6 years ago was had a friend of his who was like trying to get him into crypto, and he was like, I don't really understand crypto. I don't want to get involved. And the guy kept pushing and pushing and pushing. He's like, I gotta do some research on this. Well, evidently he's a pretty smart guy. I mean, he's an actor, but he also has a degree in economics, and he did a ton of research, and he ended up making this documentary. He wrote a book and then ultimately turned it into a documentary where he was going around and trying to really just fully understand the world of crypto, and essentially came to the conclusion that it's total garbage. And the title of his documentary is "Everyone is Lying to You for Money." So he's been making the rounds lately on a lot of the late night shows and things like that, just talking through some of the things that he uncovered. And it's one of those things that, even aside from crypto, like gambling, I mean, you can make the argument that it is a version of gambling, and it's not like a tangible real investment that you are making into, let's say, a company or human capital, anything like that. You're just speculating, you're guessing.
Yep.
Anyway, I say all that to just, I was curious, did you guys put anything related to crypto or any other speculative type things in that presentation?
We did.
Yeah.
So yeah, so talking certainly to crypto and to gambling. I mean, I have a number of people in my life that enjoy sports betting and things of that nature. I know it's highly popular right now, but yeah, I mean, obviously, how we view that truly different from saving or different from investing, and trying to measure what the goals are, what the risk is that comes along with that, what's the time frame of the payoff, what's the strategy, what's the probability. So all these different kind of factors that play into, you have three kind of distinct possibilities of saving, investing, and speculating. And that's not even probably talking about the most common one, which is just spending, right? Not doing any of it for the modern American here. But yeah, it's we do talk about a number of different assets that I would say are a bit unconventional as well. So we've got under liquid, you have your stocks and your bonds and cash and let's say treasuries or things like that. Those are all pretty normal, but then you have options, you have futures, you have crypto. Some people may know what options and futures are, very much do not. Crypto is the same way. We talked about hard assets, so physical metals, art, oil, cars. My personal favorite, collectibles, primarily in cardboard form. And then we've got obviously things like real estate. So houses, apartments, commercial, industrial, land, whatever else.
Yeah.
Yes, we try and speak to the gambit.
I remember in a FI 101 course, there was a few people there, and maybe they've been at some of our other meetings as well, that there was been some very young people that have joined those conversations, and not to say that they fall into this category, but a lot of the speculative and the riskier quote unquote investments they seem to be more heavily on the younger side as far as the people who are actively partaking in them. I know even my sons, they were trying to do some day trading, and I'm pretty sure it hasn't worked out well for them, but they haven't told me exactly what the end result is. But there was a recent, who George Campbell is, from the Ramsey team, young guy who he does a lot of like Dave Ramsey's videos these days, but he goes on the streets of Nashville interviewing people and asking them different questions. And one of them that I watched yesterday, he was interviewing a young guy. He was like 18, and he was like, what do you do for work? And he's like, I work at Burger King after school. And he's like, oh, great. Are you saving any of that money? And he's like, I'm day trading. And he's like, oh, really? How's that working out for you? He's like, not so well, but I know I just need to keep at it. I need to keep learning, and I know that I'm going to get better as time goes on. And he's like, oh, really? Do you know that only 3% of day traders ever see a profit? And he's like, yeah, I knew that. And he's like, really? Do you feel like you fall in the 97, or you feel like you fall into that 3%?
Yeah, fall in that 3%. Yeah. Uh-huh.
He's like, yeah, it's just going to take a little bit more time. And he's like, okay, well, how did you get into this? He's like, my friend was talking about it, and he did this. And he's like, oh, so your friend's making a lot of money? He's like, no, he hasn't made any money either. So, but it's just
a little bit more time, Josh.
Yeah.
Come on, a little bit more time.
It's unfortunate that these young people, they think that it's like a get rich quick scheme, and if they just, he always likes to show them the numbers where he's like, if you invest this amount, and he starts with small numbers like $50 a month, this is what you could have in this many years with just investing it into the market. And even in a situation like that, I think they're looking at it he's typically looking at like traditional retirement age, like, oh, this is how much money you'll have when you're 60 or 65, which probably if you're 22, 24, 18, whatever, is just going to be like, okay, whatever. I'm not going to think
Yeah.
about, 40
Thanks.
by,
Yeah. Thanks. This thing that I would never ever am going to think of until,
yeah.
yeah, I'm 60. Yeah.
But in reality, though, what is the shockingly simple math behind early retirement? And I can, attest to that, like seeing how far my net worth grew in a short amount of time with a lot of contribution, but in a market, a lot of market tailwinds at my back, it grew so fast that it was like almost, it feels like after now, like getting rich fairly quickly. It's not overnight success by any means, but anyway, I'm glad you guys have that in there, and maybe there'll be like at least one or two people that will hear that, and if even if it's not as something that someone in that room is actively participating in, maybe it's something that they can be able to share back to, like you said, the butterfly effect, share back to somebody else in their life and try to get them pointed in a better direction of like real investing instead of speculating.
Exactly. That's all I can hope to do is just throw that pebble in the water and let the ripples turn into waves, right?
Yep. Well, all right. Did you have any other particular things you wanted to dig into there on that? Anything else on your
Until
mind?
next time. I, well, so I will say you talked on the last episode how you were pretty close to potentially a milestone of your net worth, but I will say the milestone that I didn't hit, but or I don't think so. I mean, I would have to go look, but I almost had where my liquid net worth increased more than my annual salary in a month this last month, and that felt like insane to me. So I know, I mean, of course, as you start to get closer to that point in time where your assets are making more than you are, that's pretty crazy to me.
Yeah, I think mine definitely surpassed my annual income over the last month at my highest point. So yeah, it's amazing to see, and of course, just as quickly as it goes up, it could go down. We
Oh
all
yeah,
we all know
yeah.
that.
We all know it was also down before this, so yeah,
Yeah, it is fun to watch that though, and just see that flywheel's spinning with compounding, and knowing that those dollars and those have made dollars and those dollars have made dollars, and just all of that, and that's another topic. I don't know how much, I can't remember how much we touched on or Alan touched on the topic of compounding in the 101 class, but I mean, I think that there's still probably a lot of people that struggle to fully understand what
yeah.
compounding means.
Yes, and we do have definitely an example of kind of going along with that saving versus investing and what that really translates to. So we've got an example of just using 50 years from 1976 to 2026 year to date. What kind of returns look like if you were just had your value of $1,000, so just keeping up with inflation over that period of time. Then an example of if you were just putting it into 1 year treasury bills, what that would equate to versus what it would be in the S&P 500. And I mean, it's shocking, if unsurprisingly.
Yeah, the
So
spoiler, there's no
yeah,
comparison, right?
yeah, exactly.
Very good. Looking forward to it.
Yes, looking forward to it. All right. Well, until next time, Josh.
Yep. Thanks, Elliot.
See you Thursday.
See ya.
Bye.